The Federal Reserve just flipped the housing market. And this rate hike pause is no bueno if you were hoping that home prices would be going down anytime soon. This video is a deep dive into the major changes that are happening in real time right now so that you know exactly what is going on. And I think that you will be shocked to learn exactly how lagging housing market data that recently has been published is as it relates to home prices and as it relates to distressed sellers right now. And most real estate professionals are going to look at the most recent data and give you a bullish argument as to why everything is great and the housing market will only go higher. I just don't happen to be one of those people because I'm committed to telling you the truth so that you can make the best decisions for yourself, for your family, and for your financial bottom line. When the most recent numbers were published last week on Thursday, I immediately did a deep dive into analysis as to what those numbers are in my housing market. And I'll include a link so that you can check that out. But the numbers that are published are macro numbers. They are not hyperlocal numbers. And so those numbers are distorted. But even worse than that, those numbers are old because what happened in May is completely irrelevant to what's happening right now. And while it's possible that there is some entertainment value out of reading last month's Wall Street Journal, it's an academic exercise with no economic value. But I'm here to tell you the truth about what's happening right now. And if you're interested in learning exactly what's happening in Boca Raton, Boynton Beach, or Delray Beach, please keep watching because I'm going to cover each of those housing markets thoroughly. And more importantly, I'm going to do a deep dive into the personal financial distress that folks are suffering from right now. And we're going to do a deep dive into the distressed sale market that exists within the state of Florida. And to be clear, while this is not a knock on anyone in particular, if you're following what the published data is from real estate organizations, then you are absolutely clueless as to what's happening right now. And having been a stockbroker for damn near 20 years, there are three distinct economies that are trading right now that paint a very distorted picture if you're not paying attention to all three of them at the same time. And I'm going to do a deep dive into all three of them because all of these things are tied together and must be understood. But let's start at the top. Let's start with Big Papa Powell, because Big Papa Powell is doing his thing just like he said he would. And the Federal Reserve just flipped the housing market. And we're going to start with an article that was published by Fortune magazine. Lance Lambert wrote the story, and the title is Fed Chair Powell, the U.S. housing market is putting in a bottom. And we're going to use today's information to determine whether that's true. But as of Wednesday, Fed Chair Jerome Powell took the podium to announce that the central bank would hold interest rates flat in June. He did not rule out future hikes and called this move a skip. Well, skip to your loo, my darling. And I suspect that there's going to be a lot of folks that skip to their loo right into bankruptcy, but we'll get more into that later. Towards the end of the event, Powell was asked to give an update on the nation's most interest rate sensitive sector, which of course is the U.S. housing market. And he went on to say that housing is certainly very interest rate sensitive. And it's one of the first places that is either helped by low rates or held back by higher rates. And we certainly saw that over the course of the last year. And he goes on to say that we now see housing putting in a bottom and maybe moving up a bit. And in the chart, you can see in February and March, month-over-month changes in U.S. home prices as measured by the seasonally adjusted Case-Shiller National Home Price Index were on the uptick. And while all of that is well and good, I know as a boots-on-the-ground operator of a high-performance real estate team, there is a mass shortage of new listings in my market and in most markets throughout Florida and throughout the country. The supply side remains under significant pressure. And when supply remains challenged and there is scarcity of resource in the form of homes, then it's very likely that home prices are going to continue to go higher. And while the pause in Fed funds rate hikes may be good for mortgage lenders today, although that's yet to be determined, because mortgage interest rates are damn near 7%, he's also made it clear that he intends to do two more rate hikes by the end of 2023, which tells me that anyone who is in a low interest rate mortgage is very unlikely to trade out of that 2, 3, 4% mortgage and into a 7, 8, 9, 10, 20% mortgage. It simply does not make financial sense. So the residential resale market will remain constrained. And builders are about to go buck wild, making a fortune. And if you've been watching for a while, you know that I've been sharing what's happening in terms of new builds in my market, because the demand for new homes in my market is through the roof. And builders, as evidenced by the email that I'm showing you on my phone right now, which I will read, builders have a competitive advantage because builders have made a fortune over the last few years, and they can create better rates for new buyers. And that's exactly what they're doing. They've got the capital to be able to subsidize some of these loans for a period of time because they know home prices are going higher. They know that supply is constrained, and they know mortgage interest rates are going to continue to uptick. And the best way to be of maximum service and maximum value to anyone is to solve for their pain point. And that's exactly what builders are doing. And building permits throughout the country are on the uptick. Nobody is going to miss out on the opportunity to capitalize on this if they're in that space. And here's how they're doing it now. This email, and I'm reading it directly. Don't let your clients miss their opportunity to take advantage of this special rate offer. And to be clear, in the open market right now, if you've got perfect credit, you're paying 7% or damn near it. And if you don't have perfect credit, you're paying 8, 9, 10%, depending on how bad your credit is. But Toll Brothers today is offering 5.49% on a 30-year fixed rate, which is for a limited time only on selected quick move-in homes. And if you're shopping for a home in my market, you will very quickly understand and learn that there is not a significant amount of homes for sale. In fact, there are very few homes for sale that likely check all the boxes that you want them to check. And if you do happen to find one, I got bad news for you. Although it's not the frenzy of what it once was a few years ago, the frenzy is real. There's going to be 5 or 6 other buyers that want to buy that home, and you will quickly find yourself in a competitive bidding situation. And if you're buying with cash, well, congratulations. But if you're financing, chances are you're paying 7, 8, 9% for the ability to buy that home. And it's not a brand new home. It doesn't have any warranties. There are going to be issues with the property's condition, and the insurance on that home is going to be expensive. Not with Toll Brothers. With Toll Brothers, you can buy a home today at 5.49%. And they're willing to incentivize you to do so because they have control of the supply. And every time they sell a certain number of homes, they increase the premiums on the lots and the homes that come after it. So while the Fed funds rates may be increasing at a more moderate pace, the housing market is off to the races. But before we get into the distressed market and before we get into the personal financial distress, which is on the uptick in a big way, let's look at what the numbers are for May and June to demonstrate the fact that home prices are skyrocketing. But let's start with the most current data that's just been published, which is for May of 2023. We're talking about single family homes in Boca Raton. And to be clear, this data is old. I'm also going to share June because May and June tell very different stories. But in Boca Raton, a change between May of 2023 and May of 2022 was significant. A drop from 855 to 785, down 8.2%. Average sales price down 1% from damn near 1.27 to damn near 1.26. 1% decline, which certainly is not the end of the world, but it's certainly no bueno if you thought your home was worth more than it is. And it's obviously important to understand what the trends are, because in Boca Raton, during May of 2023, both median sales price and average sales price were on the downtick. And while I'm not going to get into all the stats that are listed for single family homes in Boca, because I don't want this to be a very long video, the metric that you must be paying attention to is the new listing supply, because the new listing supply was down 22%. In May of 2022, there were 345 new listings. In May of 2023, there were only 269, which tells you that the supply side is constrained. And yes, the inventory of homes for sale was on the uptick by 4.1%, but it doesn't take a rocket scientist to understand that when there's 22% less new listings and 4% increase in inventory of homes for sale, the supply side is in trouble, which supports home prices increasing in June. What you talking about, Chris? That doesn't make any sense. Okay, don't trust what I'm saying. Let's look at what the numbers say. And to be clear, the numbers that I'm sharing, which are June's most recent data up to yesterday, tell a very different story. And I'm only talking about single family homes in Boca. But what you cannot help but notice is the massive explosion in average sold price for June, because although we were down 1% in Boca for last month, we're up almost 60%, 60% in terms of average sold price in Boca Raton in June so far this month, with the average sold price jumping from 1.181, and I'll round it up to 1.2, to damn near $1.9 million in Boca, an uptick of damn near 60%. 60%. And we're going to stay on the supply side in Boca Raton for May, because I want you to understand how far the month's supply of inventory has dropped from when we were in January of this year. Because in January of 2023, there was 5.4 months of homes for sale. And in May of 2023, there were 2.4 months of inventory for sale, which was down 27.3% compared to the month previous. But it's up 20% compared to last year. And if we look at the bottom left-hand corner of the screen where it talks about current versus previous month to date, in terms of supply, you can't help but notice that we've jumped from 2.3 months to 3.8 months, which means more folks are interested in selling their homes. I wonder if that's got anything to do with the fact that home prices increased 60%. Which takes us to Delray Beach. And Delray Beach tells us a different story. May 2023, single family home sales in Delray Beach, which again, I will contrast with June, because nobody cares about what happened in May. They want to know what's happening right now. And to be clear, please stay tuned. I'm going to talk about the distressed sale market, because the distressed sale market is about to explode, contrary to the data that's being published. But we're going to know about all of it by the end of this video, so please stay tuned. Delray Beach, median sales price down almost 8%, from 820 to 755. Average sales price on the uptick, up 6.5%, from 1.219 to 1.298. And really, let's just round it up to 1.299. Average sales price is on the uptick, but new listings are in short supply, down 18%. And the inventory of homes for sale is on the uptick by 20%. And again, I don't have to be Elon Musk to figure out that there is a discrepancy between the plus 20 and the negative 18, and it nets out to something close to 2%. But I can tell you that that 2% net gain is not helpful in terms of helping home prices for people who are looking for deals, unless they start paying attention to the distressed market, which nobody knows about yet. But you certainly will, and that's all I care about. And what you can see on this screen is Delray Beach housing market numbers for June, because June is relevant. May is old. And what you can't help but notice is that the average sold price in June up until the 24th is up 7.5% from 1.277 in May during that same time period to damn near $1.4 million, a massive uptick. And I know it's not 60% like we saw in Boca Raton, but damn near 8% is certainly better than a sharp stick in the eye, unless you're thinking about buying in Delray Beach. But in the beginning of this year in Delray Beach, the supply side was up to damn near 5 months of inventory. And that dropped in May to 2.7 months, which is down 3.6 months compared to the month previous to that. But it's up 58% compared to last year in May. And to be clear, 2.7 months is a seller's market. And if you look at June numbers, which have upticked by damn near 57%, we're now at 4.1 months of inventory. I guess these sellers have noticed that their home prices have increased by damn near 8%. But 4.1 months is still a seller's market up until it's not. And when you see what's happening in terms of personal financial distress, I think you'll see the writing on the wall. Yet to be determined, I don't know, but I certainly hope I'm never accused of being the blind leading the blind. Which takes us to Boynton Beach housing market stats. And again, we're talking about single family homes. Boynton Beach happens to be the city in which I live. And what you can see is that in May of 2023, median sales price was on the uptick by 4.4%. And the average sales price was on the uptick by damn near 5%, with the median sales price going from 510 to 532, and the average sales price going from 606 to 635. And to be clear, this is a macro picture of Boynton Beach. So if you're shopping in my market, if you're shopping in the canyons, I can promise you that the average and median sales price are significantly higher than what you see on this screen, which is why it's critical you work with a professional that understands the hyperlocal market in which you're shopping. And if you're shopping in a market that I service, we would love to help you. If you're shopping somewhere else, then please reach out, because we will connect you with an all-star professional, someone that we know, like, and trust, someone that can advocate and negotiate for you the right way, irrespective of market conditions. Because ain't nobody overpaying on my watch, and ain't nobody not finding the one buyer on planet Earth willing to pay more than anybody else if they're thinking about selling. But we also have to pay attention to the supply side. And what you can see, new listings are down 24%, and the inventory of homes for sale is up 13%, which tells me there's a net loss in terms of supply, which also tells me that home prices are going higher. But before I go ahead and break my arm to pat myself on the back and start calling myself Nostradamus, let's see what June numbers actually reveal. Well, hot damn, I'm right. Shocker. Average sales price for June through the 24th, which, best I can tell, was yesterday. Average sold price in Boynton Beach is on the uptick by 7.4% from 598 to 642. And the supply side inventory, which peaked somewhere around the beginning of the year at 4.5 months, has dropped to 1.8 months in May, down 18.3% compared to the previous month, but it's up damn near 83% compared to last year. And if we look at the current data for June, what you'll notice is it hasn't changed a bit. We're at 1.9 months, which is exactly where we were at a month ago. which tells me that home prices are on the uptick. Now, if you have been watching for a while, you know that I've been talking about the systemic risk that exists within the system as the Fed started their tightening policy. And although they paused for the moment, they are going to continue to increase Fed funds rates. And depending on how long you've been watching, and I'll link some videos to when I first started talking about the obvious things that would happen in the future, which again is not because I'm so smart, it's because I've seen this movie end before. I experienced all of these things as a financial professional when I was a stockbroker. And to be clear, I'm not a stockbroker. I'm not a financial advisor. I'm not an analyst. Nothing that I'm saying should be taken as financial advice. It's simply my experience. But I also know how to capitalize on these predictable changes that will happen over time because I've done it before. And while previously I capitalized on these opportunities presented by market weakness and financial distress and systemic failure, I did that for clients as a stockbroker. And while I'll likely take advantage of some of those opportunities for myself in the future, I'm going to document the process of how I take advantage of the distress that exists within the market right now. And if you want to watch me go off and build my own real estate portfolio using creative financing with no cash, no credentials, and no credit, then please join my Patreon channel now because I will showcase that from soup to nuts. You will watch me build, scale, and grow my own portfolio, and you'll also watch me build, scale, and grow a real estate business, which is completely different to what I do as a real estate professional. But I'm going to share everything so that you can, if you choose to, take advantage of what I'm doing. And to be clear, it's not financial advice. It's simply full transparency as I build a new business that you can choose to take advantage or not take advantage of, whatever you want, but it's definitely going to be there for someone to benefit from. And I certainly hope that's you because on Patreon, I can do that. And I can also go off about every other subject that I want to that YouTube will censor me for. And ain't nobody got time for that. And before I get into the personal financial distress that people are feeling right now, I think it's important to address the corporate bankruptcies and defaults that are surging right now. And corporate defaults rose last month with 41 in the US so far, which is more than double the same period last year. Companies are defaulting on their debt due to uncertain economic conditions and heavy debt loads. And high interest rates have made it difficult to refinance as debt is more expensive. And the number of bankruptcy filings in the US this year has also risen sharply to levels not seen since 2010. I can promise you there's going to be a lot more defaults. I can promise you there's going to be a lot more bankruptcies. And I can tell you that the financial economy, which looks great on paper right now, because all of those corporations, which I talked about in the past, which did massive layoffs in order to preserve their capital and please their shareholders, are benefiting from the moves that they made a year ago today. And the S&P 500, which is damn near record highs, is benefiting from those tech layoffs. And really, there are only 7 tech companies which are leading the bull market because many of those companies that did many of those layoffs are generating around the same revenues, but they've got far more profit because they deleted much of the expense. And I'll say it in plain English. The expense they got rid of was their labor force. So a simple equation to figure that out: same revenues, less expensive equals more profit. And with that, the tech sector is ripping. And the financial sector and the stock market look fantastic. And maybe it really is fantastic. Maybe I'm dead wrong. And maybe the economic future looks a hell of a lot better than anybody ever could have predicted. But let's see what the numbers say in the state of Florida. Because May 2023 numbers are out, we're talking about single family homes. And I'm going to skip through most of this because it's not really very relevant to the point I'm trying to make, which, of course, is the distress that people feel right now, because that is burning me up. But for a single family home in Florida, median sales price was flat. Average sales price was down 0.2%, but new listing supply is down 22%, which we talked about in the previous slides. And the active inventory, which are homes sitting on the market unsold, upticked damn near 47%. And again, I'm not a mathematician, but you can do the math. 47 minus 22 tells you there's a net positive as it relates to supply in the state of Florida. And again, that's a macro picture, which is probably not helpful in the market that you're shopping in. But overall, there's a net gain as far as supply is concerned. But distressed sales are what I am focused on. And distressed sales take a long time. So what we see on this screen is old news. And having started looking at the market through a different lens, I have recognized that the numbers that they're sharing are complete garbage, because these foreclosures that we see today started in 2017, 2018, or 2019. And the same holds true for short sales, although the timeline might be a little bit off. But what you can see in the state of Florida is that in May of 2023, there were only 120 foreclosures, and there were only 31 short sales, which represents an uptick in terms of foreclosure or bank-owned activity by 1.7%. That is a negligible number and will not impact the housing market at all anytime soon. But because I'm looking at the market from a totally different lens, I decided I needed to do much more research to determine whether that distressed sale market is accurate. Because for the last year, I have believed that it was, and that distressed sales were simply not a thing in my market. The data that I'm sharing right now is from Epic Bankruptcy Analytics, and this is inside information that I paid a premium for, but I must share it with you so that you understand exactly what is happening in terms of personal financial distress. Because although there are foreclosures and bank sales that are happening right now, they're only coming up for sale or for auction today because the debtor didn't take the right action many years ago. And I want to know what the market feels right now in terms of personal financial distress. And so the easiest metric that I can find to share with you to demonstrate that is bankruptcy filings. And what you can't help but notice is that Florida is number 2 on the list in all the states within the nation, behind California. California leads the nation in terms of personal bankruptcies with 1,608. Florida is number 2 with 1,001, followed by Ohio, Illinois, Michigan, Georgia, Texas, New York, Indiana, Tennessee, Arizona, Virginia, and Maryland. That tells me there's 1,001 folks that are feeling personal financial distress. Their lives are being altered negatively by personal financial distress. And to be clear, we're talking about a month-to-date filing count. And if we look back for the selected period of a year, you notice that that year included 14,383 personal bankruptcies. And if we look at the selected period of June 1st of this year to June 24th, you can't help but notice there were 14,000 personal bankruptcies. And if we look at the prior period of May, you notice there were 16,000 plus bankruptcies. And if we analyze the change from the prior period, you can't help but notice that that's down almost 11%. But if we look at the year to date rather than month to date, you can't help but notice that Florida, although still number 2, has 8,285 personal bankruptcies filed. Number 2 in the nation behind California. But there's 8,285 people that felt pain sufficient enough to file for personal bankruptcy. Now, if you look at the section which is highlighted, which is the Florida Southern Court District, you can't help but notice that between January 2007 and May 2023, there were 223, 508 bankruptcies filed. And yes, I can get a heck of a lot granular, and I will in future videos and certainly on Patreon. But I'm giving you this wide scope of information so that you can have a perspective in terms of what was the bankruptcy situation back when the market crashed. And in December of 2007, there were 711, 711, 711, 7 even back though, Lil Joe. Let's go. All right. But back in December of '07, there were 711 individual filings for bankruptcy. And that shot within a 3-year period to 2,601. And since then, basically, that number has fallen off a cliff. And what you can't help but notice is that in May of 2023, there were only 423 filings for personal bankruptcy, which obviously means that the consumer is not feeling any personal financial distress and that the consumer is doing well and that the economy is great. But personal economies are not doing great, and personal economies are being altered as we speak. And although I just mentioned about the stock market and how some corporations are ripping and some stocks are setting all-time highs, and on paper, it appears that the financial economic markets are going through the roof, the consumer is feeling pain. Most folks can't trade out of their homes because mortgage interest rates are at 7%. And although the housing economy is ripping and home values are likely to break all-time highs, and builders are making a fortune, homeowners are feeling personal financial distress. Either their wages have been cut, they've lost their job, they can't afford home insurance, they can't afford their condo or homeowners assessments, or they simply can't maintain the house. They can't afford to buy a new roof. They can't afford to qualify for the discounts that would give them lower home insurance. They can't afford to live. None of that shows up in the stats that I look at as it relates to distressed sales. But when I do some research and I look at foreclosure.com, I can see that in Palm Beach County, there are damn near 45,000 homeowners that are in financial distress. And these homes are not on the MLS. These homes are not listed for sale. These are sellers that need help. And I pivoted to another site called Property Onion, which also demonstrates that right now in Palm Beach County, there are 290 properties that are either set for auction, in pre-foreclosure, or the homeowners are suffering from some form of personal financial distress. Which again, none of this shows up in the MLS. None of this shows up in the Florida real estate statistics. I'd venture to guess that 99.9% of the agents that exist out there don't have a freaking clue that any of this is happening. And frankly, it's against my best interest to even share it with you as a boots on the ground operator of a high performance real estate team. If I was a one-trick pony that didn't understand on whom the market is best for. Because the market is always good for someone, and real estate always trades. And there's no such thing as a bad market. It's simply whom is it best for? And I intend to have solutions to serve and support everyone. Whether it's on the market or not, I want solutions to solve the pain points that people are feeling. Now, I hope you found this content valuable. And if you did, please subscribe to the channel. If you're interested in watching me build my own real estate portfolio and create opportunities for investors who also want to capitalize on situations that I find, then please follow me on Patreon because I go off. And if you're thinking about buying or selling anywhere, please reach out because we would love to help. Follow me on Twitter where I can never be censored, and check out my next video because I suspect you will love it a lot. And until next time, peace.